It is May 28th, and this is, of course, the video log. It takes 30,000 to a million. So after I go through the account, I want to share with you some of the reasoning and some of the overview of the huge account changes and huge bets on one particular company, but perhaps two or three. So first of all, let's go into the account. I'm sitting at 148,800 at the moment. After recent drops in EBIX and Apple has left my account a little bit under the water level. So I'm going to go quickly over here on the right and show you all the positions really quick. These are the options here. You'll find the symbol, the ticker symbol, let's get the microphone a little bit closer here. The ticker, the strike price, the date of expiry, the number of contracts, and whether it's a sell or a buy. So you'll notice there are a lot of EBIX options in play at the moment. All of these are sold options. They're no longer buys. So I'll be collecting premium as time goes on, which is good. Some of these call buys on Baidu are expiring, worthless, unfortunately. And then I still have some leaps in play here, especially in this company Jd, which I'm going to be talking about today. And I'm going to go over my reasoning and just kind of put this company in perspective as to why I'm buying it. Now this is Apple. Let me switch it to today's action. Okay, so the number on the right is the daily change in valuation of my total position for each stock. So I've kind of ordered them in a percentage. So the largest part of my account is up top, and then as I go lower, these companies take a much smaller piece of the pie. If you're interested in the account performance, here's the week. About even on the week, down about 10% on the month, and then up 3.35% on the 3-month. And here's the year sitting at plus 60%. Okay, this is the account tab over here. In case you were wondering, I'm now controlling more market value worth of stock than ever before, and that's because of the increased margin. So here is what I have bought with this margin, which is Jd. That's my main investment here. I have about $15,000 worth of market value in this company and 9 leap contracts that are valued currently at $11,000. So overall $26,000 invested in this company so far. Now, some of the perspective as to why this is happening. So I've been looking at this company for some time now, and it's been drifting lower because, well, no one really knows why. People are guessing that it's because of trade tensions between the United States and China. They're also guessing that it has to do with the regulations crackdown that the government of China is bashing companies with over the last few months. So they're having probes, investigations into each company for things like monopoly practices, anti-competitive practices, and other regulations. So as a result, many of the companies have fines slapped on them, which they'll have to pay, and they are paying. And they have even recently come out as part of their accounting reporting. So they're showing up, and they're actually taking a beating when it comes to their numbers, partly because of these fines. Now, most of these fines are not very high, but they're still substantial. But the good news is that they're probably temporary, and they may actually put companies and make them be in a better position as they're forced to kind of quote unquote play nice with each other now. So I could go into detail as to what these anti-competitive practices are, but I think what's more useful is to try to put some perspective as to how I look at this company compared to US companies and look at some figures to take a really high bird's eye view of what's going on. So I have a few tabs open here for this company. So let me go through them. So the first one, I've pulled out the FinViz of JD, and I've actually maximized the browser here so you can see all the numbers without a problem. So the screen's a little bit brighter, you can maybe see me better now. So the market capitalization of JD is $115 billion at the moment, roughly. And the sales are actually 10 billion higher than that, at 124 billion. So that means it's trading at a price to sales ratio of 0.92. That's not the only attractive figure here. The other one is its price to earning ratio, which could be temporary, to be honest, because they may choose to reinvest a lot of that profit into either acquisitions or growth or improving other aspects of their business or spawning a new business. This company has spun off a couple of businesses already and has had their own IPOs to try to separate the way they run their business, and also to gain additional clients, like for example with their logistics and finance arms. But they still retain a large portion of the company. In fact, as I've looked into this, I noticed that many of the Chinese companies, just like a lot of US companies, own little pieces of each other. And I will go into a little bit of the history of the company to show you that. Believe it or not, JD has strong ties with one major American company, also a retailer, named Walmart. So we'll go into that in a little bit. Just for the rest of the figures here, this company is very cashed up. It has $13 out of the company for every 73, right? So each stock is worth $73. They have 13 of those dollars in cash, which is a lot. That's a ton of cash to have relative to your stock price, relative to your capitalization. So no worries, bankruptcies for a very, very long time, unless major mistakes are made. And even if they are, this cushion will definitely blunt most of the mistakes, even large ones. Debt's virtually non-existent. We're looking at debt to equity ratio of 0.09. So practically no debt. Most of that is long-term debt. 0.07 of it is long-term debt. So really just no debt problems at all, and tons of cash on hand. This business is very, very profitable, especially for internet retailer. Now, looking at some other figures, things that are important is earnings per share over the next 5 years is only predicted at 5%, which is probably going to be higher than that, considering that in the past 5 years it's grown by 50%. So sales in past 5 years 32%, and earnings quarter over quarter is probably not realistic because it's not sustainable, because last year, of course, at this reporting period, it was the peak of the virus pandemic. So insider ownership 7%, not that it doesn't matter that much, but what really matters here is that they're able to achieve positive numbers when it comes to their return on asset, equity, and investment. Especially return on equity is 31%, very nice. And then gross margins at 14%, operation margin at 1.5 positive, profit margin 6.5, which is very good for a business like theirs. You'll see how razor thin the margins are when we compare it to businesses like Walmart. Interestingly enough, the target prices for the analysts combined, I'm assuming this is an average, is $107 now. So the current price is $73.94, which leaves us with $40 or something like that of upside. So that's a lot. 44. Any other interesting numbers here? No. No other interesting numbers. I want to compare it briefly to another internet retailer like Amazon. Now, this isn't an apples to apples comparison at all, of course, because the way they count their numbers are not the same, plus all the spin-offs and whatnot. Amazon will also have, AWS or whatever their businesses are called, and they just report differently. But just to get a general idea, the numbers that we're going to look at here is the PE, of course, price to earnings, and then the price to sales. So here's Amazon. Amazon price to earnings is 61 compared to 15 for JD, and price to sales is 3.93, whereas JD is less than 1. So if any of those two numbers were to bridge, not even halfway, then even a quarter of the way, then that means that the stock of JD should be doubling from here. So that's quite a big difference. Okay, so even if you're just doing it for a trade, like my leaps, for example, they're set to expire in 2023, but they have a strike price that is $75, which is around the current price of the company. So if it doubles from here, that would be quite a lot of money if these plays work out. And I'm betting on them obviously working out, because JD seems to be growing at a rapid pace, and at some point investors will not be able to deny the numbers, even if the jurisdiction is a problem. So other things I want to point out here is, look at the number of employees, by the way, that Amazon has. So Amazon has 1.3 million employees roughly, whereas JD, for having a sales that is about a quarter of Amazon, has 300. So instead of, let's say, 400 proportionally speaking, roughly. So with less employees, they're able to achieve similar, if not better, sales. They're able to achieve better sales with less employees. Not to mention, by the way, that China labor for right now is a bit cheaper. I know it's relative to their earnings and whatnot, but still. So cash per share, yes, Amazon has a lot of cash, but price to sale and PE, definitely a big factor. These numbers look a little bit like the same. The return on equity is also excellent on Amazon, but the operating margin, profit margin are also, I guess, in the ballpark. Now, here are some other slides that you may want to look at, tabs rather. Oh yeah, I put this Walmart just to show you. This is, I think, outdated data, but revenue 500, it's number one retailer in the world, right? 534 billion, but net income only 15 billion. So you can see, I just want to pull that out just to show you that the margins of these type of businesses are very, very slim. The retailers, especially mass retailers like these. And you can see how overpriced comparatively. Of course, it's internet business, you got to value it differently because of scalability, but 1.6 trillion market cap for the 300 billion revenue for Amazon, whereas Walmart is trading under its sales, under its revenue number. So here's another slide showing the revenue, basically numbers for some of the biggest retailers, and you'll see that only one or two of them are internet companies, and most of them are physical store type of branches. Of course, Walmart is a little bit of a hybrid nowadays. Also, by the way, remember that Walmart owns a little bit of JD. And you can see this is what it looks like. Now, you actually see JD here, and this is an old figure since it's 73. Now it's probably moved up the ladder past other companies, so it's probably in the top 10 at the moment as the largest retailers in the world by revenue. Not to mention that they are internet based only 100%. So they're climbing up the ladder, literally. So here's the next tab. These are the largest internet companies in the world by revenue. And you can see that Amazon is, of course, number one. Alphabet, Google is number two at almost 200 billion. So Amazon 400 billion. Let's say Google's 200 billion. JD 124 now, but it says 114 billion here. And so that places JD.com as the third largest internet company in the world and the largest one in China, believe it or not. That means it's bigger than Tencent, it's bigger than Alibaba, it's bigger than Sony and ByteDance. All of these companies are smaller than JD by revenue. Now, Alibaba has many more assets, and it's valued at almost 6 times the valuation of JD.com. You'll see that out of the top 6 companies, Alibaba, Tencent, Facebook, JD, Alphabet, Amazon, JD is valued at 115 market cap, and the next lowest, okay, we're going to take Sunning out because it's the number 7 one, because it's also a Chinese company that's not valued in the same way. The next biggest one is Alibaba at 600, so 6 times the valuation. Then it's Tencent at 763, Facebook at 842 billion, Alphabet 1.5 trillion, Amazon 1.7 trillion roughly. So there's, relative to the revenue that they're making, they're very, very undervalued compared to their internet peers. Now, I want to do a brief history here of events of this company. I'm not going to obviously go over all that, especially the early history, but there are some things that I want to note. I want to note that there was this deal here in 2016. By the way, JD.com also has a Russia launch. It plans to expand globally, so they do have ambition to expand globally. So if you're thinking about JD as just an internet business in China, well, they're also planning on expanding globally. So that means in the future they're going to look again to do it, just like Alibaba has kind of sprawled its tentacles into other parts of the world, especially with AliExpress and their B2B businesses and their wholesale arms. They're expanding, and even many people in the US are using them for bulk purchases and everything else. So JD has ambitions of its own, and it was kind of meant to be a competitor of Alibaba to begin with, but I think it's kind of grown its own character, and it's grown in itself to become something larger than just a competitor. It has an identity, and they have a little bit of different goals and direction of their own. So going a little bit further, I want to note the Walmart deal here. It says Walmart sells its Chinese e-commerce business, I don't know how to pronounce that, to JD.com in exchange for 5.9% equity stake valued at 1.5 billion. Now, interestingly enough, the 13G filings in October 2016 revealed a stake nearly double that at 10.9%. So they kept buying more and more shares of JD.com. Walmart did. And this is a thing really important to me and really telling, because I should have invested back then if I had my eye on this company, because why would someone who's trying to compete with you sell out to you? Why would somebody sell their company to you if they're trying to compete? It's because they cannot outcompete you, right? So that means you're such a good competitor that they'd rather sell to you than go out of business. You have two choices, right? cannot compete someone, you either go out of business or you sell them your assets and let them do a better job than you're doing. And so Walmart is doing this, and Walmart is a very good company, right? They have assets, they have money, they know how to source information and everything else. So there's no reason one would think that they can't be good competitors. But apparently, they're basically surrendering to JD and their superiority in running this type of business. So for whatever reason, it could be political, it could be because JD is a local company and therefore they have that edge when it comes to regulators and the party and whatnot. But I don't know the details, but the fact is that there is some kind of moat there that Western companies cannot penetrate, perhaps. So that's one thing of note. There are other things of note in their history that I really like. So they started out buying different types of businesses, including their investment in Vietnam. They bought Tiki.vn, and sometimes I usually go to these sites just to check out what they look like, so I have an idea of what these companies, I'm trying to get an cultural understanding of how these things operate. So actually, many of the Chinese companies actually can't access. It's very hard. So, but I can pull up Tiki.vn, and this is what it looks like here. I have no idea how to read all these things, but I want to know what the Vietnamese retail site looks like. And I'm not sure if this is the biggest one. I'm assuming this is the biggest one. If you do live in Vietnam and know what the biggest shopping sites are, just let me know so I have a better understanding. But I would think this is a good investment here. It looks a lot like the Chinese side, the JD site. And speaking of JD site, I was able to pull it up, and this is what it looks like. So to me, it looks very similar to Amazon, and in fact a little bit flashier. I just find it interesting, some of the items for sale that are on the front page. I saw an iPhone flash over here. There's a piece of furniture, fake iPods, corn oil, 2 bottles of corn oil, like instant pizza. Okay, so these are very interesting just to kind of get an idea of what people are buying. There's a watch here and washer and dryer combination here, or I guess something for the washer and dryer, and of course electronics of all sorts. Oh, there's a little bit of a motorized, what is this, scooter with a shopping basket. So to me, it's interesting to see what kind of things people are most attracted to or like to buy online in that country. I think this looks like books, maybe whipped cream. I'm not sure what that is. Motor oil, etc. So anyways, this is the site. It looks pretty good. And then finally, the company is actually turning a little bit profitable now. The final thing that I should mention is that it's finally turning profitable. It's of course 2020 was a crazy year, and online retailers got a lot of business, I guess, apparently in China as well, since everybody was locked down. So it kind of accelerated what they were going to do, and maybe that's why they're so cashed up, is because they weren't planning to expand as quickly as money came in. So I'm curious to what they're going to do with that money, whether they're going to continue make their expansion more aggressive, or perhaps increase their safety cushion. But either way, I think that JD is a very safe bet. It's a very good bet. Personally, I think that the company, relative to the competition and what's out there, is undervalued. I don't know that much in detail what the risks are specifically when it comes to the listing risk. I believe that that's very minimal. They are ADRs, American Depository Receipts, right? They go through offshore entity, and they're able to trade on the U.S. exchange based on that. But even if they get delisted, one will be able to buy the stock from Hong Kong exchange where they're listed with no problems, even if the relationship between the U.S. and China deteriorates further and financially, Westerners will still be able to purchase the company. Other things of note, just to summarize, is that the company has ambition not just to grow in China but worldwide, and it's grown at a very, very fast clip at the moment, which could slow down. However, it's very clear compared to other internet companies, especially companies like Amazon, company is very undervalued. One last thing I want to mention about it is inflation. So in the States, there's this inflation talk and how the dollar is going to get devalued because of all this money being pumped into the regular consumers and all this inflation wave that's sweeping, the country. Investing in China, right? If we think about inflation of currencies relative to one another, investing in China should actually be kind of a safe haven from that, right? Because the currency that you're getting your income in is not dollars, but the Chinese yuan. So if you're getting in Chinese yuan and Chinese yuan is raising in value relative to the dollar.
Lexus UX and UX S Sport with the best-in-class turning
What is going on here?
and our most advanced standard safety system ever. Also available in hybrid all-wheel drive.
Okay. Free ad. Anyways, what was gonna say? Yeah. So if you're afraid of inflation, then that's one way to kind of hedge for it, is actually buying a Chinese company where the Chinese yuan could appreciate, relative to the US, and you'd be a little bit safe from that. So that angle is not very talked about at all, and I want to put it out there as a possible tool of overcoming some of the fears that investors might have investing in retail. All right, this video is already really long, so I'm going to end it right there. It's been real. Hopefully I get to make another video on Monday. Peace.